Hi, this is Nick Inman from VolumeProfileTrader.com on Wednesday, October 26th. And here we're covering the E-mini S&P futures contract. And today we had an interesting day. We gapped higher and then basically got slammed and found a low where I've talked about in previous videos that we were looking for. So one thing I talked about in a previous video was how this red moving average, which is the 89 exponential moving average on a 2-hour chart, we saw that the last two times it came to that moving average, it was a buying opportunity. So for those who like moving averages, there's your 3 profitable trades. Now, each time, just to be aware, it did penetrate the moving average all 3 times briefly before moving higher. Now, another level that I found significant, or another pattern I should say, that made sense for why we bounced today was the fact that we had this triangle pattern and a breakout of the triangle pattern. And basically what we saw today on a bigger time frame was a back test of the breakout and then a successful move higher. Now, it won't be truly successful until we make new highs relative to what we saw on Monday or Tuesday morning during the overnights for the S&P, but around 1250, give or take. So, that was another successful, sorry about that, that was another successful test off of support. And the last one was this, if you look over on this volume profile chart, you can see where my mouse is, this volume is sticking out much more than any of these. And look where price was when, or look where price stopped, I should say, relative to this volume profile, and you can see it was another nice bounce. So basically we got a trifector of traders looking at the same level and basically a successful trade off of it. I tweeted today that one thing I do is I day trade the E-mini S&P and I swing trade stocks. Generally speaking, that's my overall strategy. And I was saying today that I was tweeting it, I was saying 1217, that could be your bottom. And then I retweeted saying that we were up 8 handles and this could be a nice one. And sure enough, we ended up rallying another 14 handles or so on the day. So that ended up being a great trade. I hope you caught on, and if you didn't, maybe next time. But right now, to be honest, 1260 is my ceiling. It may be 1250. I'm more inclined to sell into this strength rather than continue to buy. And that's not necessarily because I'm bearish or bullish. It's not that. It's just my risk and how I manage my trades. If I zoom out a ton, which I'm not going to do that, but if I zoom out, I've been talking about this bullish move for the last 3 or so weeks, how whenever this market made the bottom, and I've been saying, this is a buying opportunity. And if you've been along for the ride, you've made a ton of money. And, just to not be greedy, I'm taking money off the table. I'm selling into strength because that's what makes sense to me in my risk profile. For you, it may make sense to continue to buy with a stop under today's intraday low, and that's fine. There's nothing wrong with that. You may be right. This market may go up to 1300 by the end of next week. But what your job is to do as a trader is to manage your upside risk versus your downside risk. And right now, my opinion, even though we still have a bullish setup, is basically I'm comfortable holding more cash, and there's nothing wrong with having a cash position. It's a type of position. It's just like holding stock, except for it's cash. And that's basically what I've been doing the last few days. I've been exchanging stocks and also option positions for cash, and I will probably continue to do so unless we really start to move higher, and I will get involved in other ways, basically ways that manage my risk and not so much, maximize my potential losses if a trade goes against me. So overall, this is just an analysis of the S&P 500. We had a nice rebound today, but there are some concerns, to be looking out for. And we had a pretty harsh sell-off earlier. It wasn't in points. It wasn't too bad. We sold off 20 handles, 20 points. But there was some aggressive selling. I was watching the tape today, and there were aggressive sellers, and it seemed like almost that those sellers got squeezed, and we saw a short covering rally. That's what it looked like. But I'll end it with this: that there is nothing wrong with sitting in cash if you have missed this move. There will be more opportunities, and we'll both be here to grab it by the horns. So. Just be patient, wait for the next opportunity. It will come, and I'll be right there with you. So, this is Nick Inman from VolumeProfileTrader.com.